Oh my gosh, did you guys catch this non-farm payrolls last week? It was very, very disappointing. So we'll talk a lot about the non-farm payrolls on Friday. We've got a lot of inflation data coming out here this week. And our question of the week, I think, is going to be a really good one, given what we're seeing on the inflation side. We're going to talk about the supply chain issues and kind of what's going on there. So look forward to jumping in here today. We've got a lot to cover. And I think our question of the week is going to be very, very timely, given some of the inflation stuff to talk about. It's nice to be back in the office. For those who catch this weekly, I was actually on a work trip last week just for a kind of quick day and a half type of thing, but it was very nice. First thing I've been on in who knows how long, I guess like 2 years probably. I can't remember, honestly, the last trip I took, and it definitely felt good getting out a little bit. But with that, the day after our last session on Thursday last week, we had non-farm payrolls come out, and the number was absolutely terrible. It was 194,000 jobs added in the month of September versus the expectations or the hopes of 500 or so thousand. Many are saying that this is like a terrible sign and people aren't going back to work. But I think the thing to keep in mind is that this data point in September only had, I believe it was 2 weeks or so of the unemployment benefits being halted. So I think it's a little too early to jump on that. Like, let's see what October brings, and hopefully it's a good thing. Let's hope there's a lot more jobs added for the month of October, because this was not good. But just kind of keep that in mind, that it might be a little early to jump on that bandwagon quite yet. Let's see what October brings, and hopefully that's where we'll see a giant number. Because we also saw on Tuesday this week, we saw job openings near 10.4 million. So they came down a little bit, but clearly a lot of job openings and not a lot of jobs added. So we've got to see that change, obviously. That said, the unemployment rate came down. It was about 4.8%. Take that as you will, I guess. Obviously, we have a problem in the labor market. So it's not, although it came down, clearly there are still some issues. And we all know how faulty the unemployment number can be, and some of these jobs numbers and data in general. So definitely something to keep an eye on. That October number is going to be really, really important. So when we get into early November, keep an eye on that non-farms payroll. We will obviously be talking about it as we get closer to it, but this was not good. So hopefully we see some signs of improvement there, which we started to see a little bit today. I'll get to that here in a minute, but hopefully that's the case. Switching gears, we've got a lot of inflation data coming out here this week as well. So we had consumer price index come out yesterday, I believe it was, and it came out at 0.4% versus 0.3% expectations. And also, I think it was 0.3% for last month, for the month of August. So inflation's still here, right? We've all heard about how this is not going to last and all this stuff is going to be the case, but we're higher than we were last month even. And that's even with Delta and a lot of things slowing down, right? Now, hopefully it continues. Those numbers have started to slow, and we're starting to see people travel again, I think, for the holidays. But because of Delta, we saw a lot slower movement in our economy, and still inflation picked up by 0.4%. So something to watch. Food and energy, I believe, seem to be the areas where we saw the highest increase in that, which is understandable. And for those who are paying attention over in Europe, energy costs is becoming a huge, huge problem. Now, this is U.S. data, but it's important to kind of factor that into. And I'm curious, if you thought this number was going to come down. It's not. It's not silly to think that. I think a lot of people thought that this number was going to be lower, and here we are, even higher than last month, even higher than expectations. So, I know we've been talking about this a lot, but we do feel strongly inflation is going to continue. Whether it drops from 0.4% a month to 0.3%, like I wouldn't say that's slowing. I would say that's still high. So, keep an eye on inflation for sure. And as kind of a hint at where we're going with this, I think the supply chain issues is a big part of that. I was in Laguna Beach for this work trip last week, and when I was flying in, they have a big, what do they call it? Container ships outside of that area. And I counted 40 ships just sitting in the harbor, just waiting. So obviously we've got some issues, right? And we'll talk more about that here in a little bit, but that was pretty crazy to me. I caught it like out the window and had to count how many were out there, because it was just a massive number. All right, so inflation's still here, clearly. We also had PPI come out today, which is producer price index. And that came out at 0.5%. Now, the expectations there were 0.6. and I saw some headlines saying that producer prices are coming down. It just seems like there's this narrative where just because it comes down from a high number, it's not a bad thing. These prices are still increasing at 0.5%. So we got an issue here. And then back on the jobs market, today we had initial jobless claims come out. So this is the one kind of glimmer of light that I saw here in the jobs market recently. Today, initial jobless claims came out at 293, a good sign and a good trend. We had 3 weeks or so where that number was going up. And now we've got 2 weeks where it's come down and come down quite a bit from last week too. Hopefully that's a good sign of the labor market. That is going to be so important, especially with unemployment benefits ending. So hopefully we get some people back to work. Hopefully we fill some of those job openings and we can kind of get back to some sort of normal on the labor side of it. Next week, we have retail sales coming out, which is going to be really important to watch. Again, especially with everything we're talking about with inflation, jobs, all the above. And then we've also got some housing market data. So tune in next Thursday at 3. We'll be sure to share more there. Before though, we jump into our question of the week. And if you guys have any things that you're watching, the supply chain issue, I've heard a lot of questions about, so I wanted to make sure to touch on this. But let us know, and we'd be happy to answer in our question of the week and send a copy on me if we end up using your question or your topic. Question of the week this week is again on the supply chain issues and what is this issue? What is going on with the supply chains? And you've probably heard me say this a lot when we talk about inflation, but generally what is happening is we took this giant economy of the entire world and just turned it off, right? Now, the challenge is that we tried to just flip that thing back on as well, and it doesn't work that way, right? This is not we can't turn the economy off and on like a light switch. There are literally hundreds of years of supply chain efficiencies and processes and things like that that have kind of worked their way into our current system. And to just shut them down and then try and turn them back on is not going to work. It's going to take some time to get through all that. That's what we're seeing. And I think it's obviously a temporary thing, but I do think that, if you're hearing signs that it's going to be short-lived or whatever the case might be, I guess it depends on how you define short-lived, but I think it is going to be here longer than a lot of people are suggesting, or a lot of people may feel like it's going to be the case. But it is temporary, to be fair. Now, that said, we also have the money supply side of the equation. And so that might take a little longer to work its way through. We may still see inflation longer than just the supply chain issues last too. But generally, that's what's going on. I mean, we literally turned the economy off, trying to turn it back on, and now we're realizing kind of the pains of that. And so, again, I do think it's going to be a little longer than most expect. The example I gave you guys when I was out in Laguna Beach there last week is a perfect example. That is not good to see 40 giant ships all sitting there doing nothing, right? That's a lot of goods just not going anywhere. So we've got a lot of issues. Hopefully they will start to work out. I think my opinion on this, which I want to preface by saying does not come from data. This is my observation. So take this with a little grain of salt. But with the Delta variant slowing us back down a little bit again, right? We weren't going out as much again. Things kind of slowed down a little bit. Companies slowed down their production a little bit because they weren't sure of what to expect with Delta and whether or not some more shutdowns would come, or whether or not people would keep buying, all these different uncertainties that come up. So companies slowed their production again. And so I think that is going to further delay the ability to get through these supply chain issues and, again, maybe around for a bit. So hopefully that helps kind of give some insights into why we may be running into these issues. I obviously don't have a solution for them. That is way above my pay grade. But I think it's important to understand what's going on and how that's going to factor into what may be ahead, and especially factor into some of these inflation data points that we're starting to see. So I hope that helps. We'll see you next Thursday at 3. Again, let us know if you have any questions. Otherwise, next week we'll be talking about retail sales and the housing market. Thanks a bunch. You guys have a good day.